Stu Burkett here again with another video blog update, the second of the week. Thanks for watching. I have in my hand another article that was written by Mr. Tyler Durden, who was reporting on a television interview on Bloomberg TV, and the interviewee was a gentleman by the name of Hao Hong. And he is an analyst as to the Chinese economy and currencies. Now, if you've been a viewer of the video blog for any length of time, you know that I talked a few weeks ago about China's new gold fix. China actually has set up a market to trade in gold. And unlike the COMEX market, where there can be up to 150 ounces of paper for just 1 ounce of gold, this market is 100% gold backed. In other words, you have to provide delivery. For every contract traded, there's an ounce of gold backing it up. Well, Mr. Hong made some comments that this has been a planned move, and it's a move away from a U.S.-centered monetary system. In other words, a move away from the U.S. dollar. I'll give you just a bit from the article. China's shift to an official long currency-based gold fixing is, and this is a quote, the culmination of a 2-year plan to move away from U.S.-centric monetary system, according to Mr. Hong. He said during this interview that by trading physical gold and renminbi, which is the Chinese currency, China is slowly chipping away at the dominance of U.S. dollars. Gold, silver, and petroleum, Mr. Hong said, are 3 U.S. dollar-based commodities that China wants most control of. But gold, he said, in particular, is one of the commodities that China is hoarding very hard. Hong said that those who think that China will never dump treasuries or hurt the dollar, in other words, China owns a lot of U.S. debt. And he said, for those of you that think China's got too much of it and are too dependent on the U.S. dollar to ever get rid of them, they would hurt themselves. He said that's not really true. Things are changing rapidly. In fact, I did a conference call with my clients over about 2 weeks ago to talk about how rapidly these things are changing, and I advised many of them to add a small percentage to their physical gold holdings. Mr. Hong said the gold reserve on the China balance sheet has almost doubled since 2009. Let me repeat that. The gold reserve on the China balance sheet has almost doubled since 2009. By holding gold and moving away from a U.S. dollar-centric system, we actually require fewer U.S. dollars. Bottom line is this. Fiat currencies, historically speaking, have a 100% track record of failing. Fiat currencies always fail. Now, I'm not suggesting that the U.S. dollar is close to failing. I'm just saying we're starting to see an accelerated move away from the U.S. dollar worldwide. You need to protect yourself. If you have all your assets based in U.S. dollar denominated assets, it might be time to rethink that strategy. I'll be back next week with a couple more video blog updates. Thanks for watching.